All right, when we look at our trading plan rules, and again, the first thing that we want you guys to learn in the trading plan is what? Trend trades. And, understanding the highest probability look is one of the most important things that you can possibly do. And again, look, I saved these pictures the other day, and it's a little dramatic, but if the big chart doesn't look right, don't do the trade. Make sure you've got the correct look on your 14-2 chart first before you start looking at your small chart. Same thing is true on the short side, right? Make sure that all of your triggers are going down and everything is really nice on the big charts, and then you start looking at your little charts. Is everybody okay with that? I want to make sure you guys are good with the concept that's in the trading plan, which is, make sure you've got your big charts saying the right thing first. And again, we've got all the looks in here, and I want to go a little further, and I want to take that concept and I want to expand on it and put it on the little chart. Because, ultimately you can go, yeah, John, that's a really cute big chart look, but where do I get in? Because you don't get in on the big chart, do you? I mean, you can sometimes, but it's rare. So you got to use the small chart to time your entries. And this is what trips up most of the new users. They are not adept enough at timing their entries on the smaller charts. So again, I'm not going to stray away from the fact you've got to have the right look, right? So again, the right look is important. What I'm going to focus on today is, what does the small chart look like? Okay, and when we look at a chart, we have rules, obviously, for trades, which I'm going to assume you guys have gone through the rules once, but for simplicity's sake, we're going to do it like this. Both the 14-2 triggers and the 21-3 triggers have to be both crossed up or down. Okay, and what I've done is I've written a little something on for you on gold. So check this out. It's a little program. It's a visualization program. And this is Shark Indicators, Jeremy Tang. We used to work with him for years and years. Great guy. So, this is his program, but we used it for years, but, it's a good visualization tool. And what I did is I took the logic that I'm telling you about right now and I wrote it out into this little program. So again, the rules are pretty simple here. I'll blow that up so you guys can see it. The small triggers on the 21-3 chart direction is going to be key for us. So you see how it says 21-3 small trigger direction? Also, we need to have the direction of the 14-2 triggers, right? So again, I want to go back and forth real quick. So that's this rule right here. Both the 14-2 triggers and the 21-3 triggers either crossed up or down at the same time. Is everybody okay with rule number one? Rule number two is our fib to fib oscillator must be at either 100 or 75 for shorts, right at the upper end, or 25 or 0 to take long trades. And then a reversal bar is going to confirm that the trade was correct. So you're not going to know it was correct until what? Until the market goes your way, right? So we're going to show you the confirmed version first, and then we're going to work our way through things. So again, we say this in probably most of the videos, but when watching your trigger lines, we're going to focus today on the location of our small triggers versus the synthetic triggers. So, and what we're going to say is that if the small triggers are on the correct side of both of our synthetic triggers, right, meaning above the bottom one or below the top one, crossed up or down, we'll take trend trades when our fib to fib oscillator is in the right spot. Now, we're going to add, so again, look, let me show you the rules here on this thing, just so you can kind of see it again. Where did I put it? Okay, so look, here's the rules. And again, you guys stop me if you're not 100% on this, because I've got to make sure you're 100%. The small triggers must be 21-3 triggers, Vittorio, from a 21-3 chart. That's what we're using. So if I took our 21-3 chart, let me just show you here. Let me just make, I appreciate the heads up on that. So look, our small triggers are the faster trigger lines. So these are the small triggers crossed up. These are the small triggers crossed down. Everybody okay with that? And I could turn off the large triggers, but we're not using the large triggers in this situation. So we're using literally just the small trigger line itself for this lesson at the moment. Is everybody okay with that? 21-3 small triggers crossed up, 21-3 small triggers crossed down. That's rule number one. Same thing on the 14-2 chart. Now, this is where we added in the logic for our fib to fib oscillator to be at 0 or 100, or to be at 25 or 75, which is what we have in the rules. And then this little piece right here is going to tell us when we had a reversal bar, up or down. And this is basically your simple trend trade rules. The only thing that's missing in this scenario for our entire trading plan is the Fibonacci areas and the indicators. Is everybody okay with that? Both triggers crossed in our favor. Fib to fib oscillator doing the right thing. Get a reversal bar. See what happens. So this is what we end up with. And it's going to draw, this little indicator is going to draw these green and red lines on the chart where we have that condition. And we're going to go a little bit further and we're going to talk about the rules for what we're going to do with it. Okay? Again, if the small triggers are below all of the synthetic triggers, then we're going to trade shorts. If the small triggers are above all the synthetic triggers crossed up, we'll take long trades. Now, I'm adding in a little piece for you guys for this demonstration. The first trade after the small triggers are on the wrong side, and we have a failure to keep going, we're not going to do any more trades. So let me show you what that looks like in the visual here. So again, let me break this down for you guys so you can kind of see it here. Well, there's two scenarios, Pete. Thank you for asking. There's one scenario where the small triggers are all on the correct side. Well, we're going to go through about 100 of these, so you'll see as we kind of progress here. So if the small trigger's on the correct side, then we just keep trading away as long as the market keeps going. Once the small triggers are on the wrong side, we're only going to do one trade unless that trade really wins big. So let me show you what it's going to look like. So this is an example of a trade from the wrong side. So the small triggers are physically below all of the synthetic triggers. So again, look, these are the synthetic triggers right here. Right, so the 21-3 triggers are wider, and the 14-2 triggers are skinnier, right? And you can see they're both crossed up because they're both green. Everybody okay with that? And then the small triggers are these fast ones that, you know, they're going to get... And again, look, this is the precursor for everything that we're going to do. So is everybody good with this? Synthetic trigger lines are crossed up. Small triggers are below. If we don't make a monster move, then we're going to stop taking trades on the wrong side. We're just not going to even do these for this lesson. Does everybody understand that? So you get one attempt from the wrong side, and if it hits them and reverses or doesn't push through them, then no more. Is everybody okay with that? I just want to make sure you're good with the rules here before we get going. So if you're on the right side, we'll keep going. First trade on the wrong side, if it fails to get through the triggers, we'll stop. Easy enough? And then let's go through and let's look at a bunch of versions of this. And then we'll look, once we're done with that, then we'll add in the rest of the goodies, fibs and all the other indicators. So look, I want to scroll, we'll just scroll back a long ways here and we'll just take a look. So I'm going way back in time. And again, look, we'll start from here. Again, look, this is our starting spot right here. So what we're looking for is both triggers crossed up, and we're looking for our fib to fib oscillator to be in the lower 25% down here. Here, I'll make these yellow for now, so they're a little brighter. And then an up bar. Is everybody okay with that? This is where we have a potential for a trend trade. Also, we have the same situation right here. We have fib to fib oscillator at 25 and all of our trigger lines going up, and we have an up bar. Just give me a little why in the room that you guys understand this so far. And again, this is when we have, this occurrence happens when both, the larger charts are really moving very well. All right, so as we go forward, what do you see? There's no trades in here. We have, one of the triggers going up and one of them going down, and we don't have any really good trade setups. All right, so look, let's just go forward until we find a trade setup. So this is an example of what? This is an example of being on the wrong side. And I say the wrong side because we're trying to go long, but the small triggers themselves are below the synthetic triggers. So again, you get one shot at it, and if it fails to keep, to go all the way up, then that's it. No more. Everybody okay with that? And again, I really just want to make sure you guys are understanding the lesson. If the triggers are on the correct side, we're going to keep going. If the triggers are on the wrong side, first time it doesn't give us a big winner, we're done. Pretty easy, right? So look, we'll just go forward here in time and you'll see. So here is, and this is way back, this is August 23rd, so I'm just kind of randomly going back. So right here, our conditions are met. Both triggers are down. Our fib to fib oscillators at the 75, and then we get a bar down. So this is 3/4 of the rules met for a trend trade short for us. And again, you can see the outcome. So as we progress forward, look what happens. We're going to get another short on the wrong side. Does everybody see that? And when I say wrong side, I'm talking about the small triggers are on the wrong side of the synthetic triggers. We talk about this a lot, obviously. And it's not that you can't still do one more trade, but it has to really win and make the market keep going down, or else if it can't get through the trigger lines, the party's over. And this one went down pretty nice. Now look what happens. I want you guys to visualize this, okay? Look at what happens when the small triggers do not get below the synthetic triggers and you make a reversal. I just want you to keep this in mind for future reference, okay? Because these are the types of spots where the market tells us and the trigger line configuration tells us we're not going any further. So now watch what happens. Again, we have one trigger line down and one trigger line up. And what's really tempting for a lot of traders is, you're going to get a trend trade right here that's on your smaller chart. But it doesn't have the momentum from both charts behind it. And look what happens. You guys see the failure here? So again, watch as we progress forward and we have everything on our side. So again, look, this is the same situation, but now all the trigger lines are going up. And again, look, here's the bottom of our synthetic triggers. So I'll draw this big yellow box in to kind of be dramatic about it. As long as the small triggers stay above the synthetic triggers here, we're going to be looking for trend trades. So we have our fib to fib oscillator in the lower 25%. We have a good potential trend trade to the long side. And again, as long as we stay above all of our synthetic triggers, we're going to have the opportunity for, again, long trades. Does everybody understand that? These are two looks where small triggers are greater than the lowest or the lower. Everybody see that? The small triggers are physically above the bottom of the synthetic triggers going up. So it creates the opportunity for more up. And as we progress forward, look, we have another trade. And again, we don't care how many trend trades we get in a row. We just want to have the right configuration. Does everybody see that? The small triggers are greater than the lower synthetic triggers. The same thing here. The same thing here. The same thing here. All right, so again, look, Pete, when you say the oscillator had hit 25, you see what I'm saying? So we hit 25, but it was a bar later that the market started to go up. So the oscillator hit 25. It doesn't have to be at 25. It has to hit 25. So the minute it hits 25, we're able to do a long trade. The minute it hits 25, we're able to do a long trade, even if it goes to zero. See that? And again, you guys ask questions as you go, and look, I want you guys to be able to see these trend trades. So look, one more time, and again, you can see it's starting to get close, but we can still say the same thing, can't we? The small triggers are still greater than the lower synthetic trigger. Agree or disagree? So you end up in a situation here where we get one trade, two trades, three trades, four trades, potentially 5 trades in a row. Now, let's keep going forward. And again, look, this is a situation where this is the first one, and I'll just draw a box on it here for a second. This is the first one that has the small triggers below the synthetic triggers. Agree? So this is the first trade with small triggers below synthetic triggers. And again, there's only 2 outcomes that can happen. when you're below the triggers. You either get back above them and it really gets moving up, or you fail. And again, just to go back to our simple rules here. On the first trade after the small triggers, if it fails, no more trades. If it makes a significant move, then we'll do another trade. Fair enough? And again, this is a visual of being on the wrong side and making a significant move. So again, we can keep taking trend trades. When the market's trending, we want to keep doing trend trades. And we want to be able to define when we're going to keep doing them and when we're going to stop. So I'll take a quick pause. Everybody okay so far? And again, look, this is August 23rd and 24th. We're going to go all the way to September 19th. So you guys are going to see hundreds of repetitions here. All right, just making sure. So we're going to go forward in time now. And obviously those trend trade longs are working out really well. And again, look, here we go. One more time. Small trigger location, guys. Above the synthetics. Fib to fib oscillator at the 25 or have hit the 25? Absolutely. All right, so let's move forward and we're going to continue on with our plan. Obviously, trend trades were working really well that day. Really, really, really well. All right, so now look, we're in a situation, guys, where we have our first trend trade potential from the wrong side of our synthetic triggers. Everybody agree with that? So the small triggers are now below again. So we want to see it really continue and get through the triggers, and if it doesn't, then that's going to be it for longs. What do you guys think about that trade? So this went from 0780 up to 1040, so that was, $250 move. One more trade. I mean, anytime you move $250, that's significant. So again, we have small triggers below our synthetic triggers. And as we reach our synthetic triggers, look what happens. You see this failure to go higher with this down bar right here? That's where we're no longer going to do trend trades from the wrong side. Everybody understand that? So again, as we kind of squeeze this up and look at it, we have all these trend trades. One trend trade, two trend trades, 3, 4, 5, 6, 7 trend trades that make at least 20 ticks. And then we get this right here. This is the failure at the trigger lines. And again, that just means this one we're not going to do. This one we're not going to do. Even though it goes up, that's fine. This is, again, where we start to lower the probability. Okay? Now, let's go forward. And again, I like going forward so that way this is like you guys are reading the charts on the right edge real time. Because if you can't read your trigger lines properly, then you're never going to read your fibs and trigger lines properly. Okay? Now, there's a couple of exceptions where we might take one of these trades, but for now, I'm just going to put some yellow X's on them, okay? And we're going to, again, when we add in the rest of the pieces, it's going to make sense, but the triggers are on the correct side, so this is going to be valid for us if there's an area. And then this one is the triggers on the wrong side. Oops, excuse me. And this is our first trend trade from the wrong side. And again, does everybody understand that concept? The small triggers are below, but the triggers are still up, so we'll take another trade. Obviously, we had a big trending up situation. So now look, we finally exhaust the trend. So that was our last trade. Hopefully there was some Fibonacci resistance up here, but we've exhausted the trend. And the reason we've exhausted is, look, the 14.2 triggers have now crossed down. So we're no longer looking for long trades, correct? So let's roll forward until we find something that fits with our agenda. Now, what you guys will also find is that you will have some smaller trend trades that don't have both triggers going in your favor. We're not dealing with that right now. The only trend trades that we're dealing with are the ones that follow these very simple rules. Both triggers have to be crossed up or down. The fib to fib oscillator has to be in the right spot. We're watching the location of our trigger lines. If we're on the right side, we're doing trades. If we're on the wrong side, we get one shot. And if it doesn't win, we stop. So, again, you can see we basically skipped this entire section right here, don't we? I mean, obviously it's from 1 o'clock until, 1900 hours, but we skipped this whole section because everything doesn't line up. Now, they're both crossed up again. So this would be a valid attempt at a trend trade long. Everybody understand it? The small triggers are above the bottom synthetic trigger that's crossed up. They're both crossed up, so we'll see what happens. And again, we didn't get out of here, did we? We failed to break out. We failed to make 20 ticks. The small triggers get below, and look what happens. We now have a situation on our hands, and you can see how, again, look, obviously if there's Fibonacci resistance, which we're not talking about yet, we'll deal with that situation. But do you guys see the failure here? And you're going to see this a lot where you're in between both of the triggers, and if you don't get out of there, it's either choppy or you have to wait for a breakout. It's really easy to see with both of these trigger lines on here. And you'll see it a lot. We're going to go through and keep going through day after day. So going forward, look at your triggers. Without even knowing anything else, can we do a short trade if we get one? Our fib to fib oscillator's in the right spot. We're moving back up. And lo and behold, we get a trend trade short. Let me save this workspace since I'm doing a lot of marking on here. Now, you guys will recognize that if we have divergence, then you're going to get an opportunity to do it again. Right? So we'll talk about that. We'll put all the pieces together. And again, look what happens. We're in between the two triggers and we're having some trouble getting out of there. Now, one trigger's crossed up, one trigger's crossed down. What's going to happen, guys? If you had to take a guess, which way are we going to go next? Based on the location of your small triggers. Just take a guess. I'm going to open it up for you guys. All right. Down. Some of you said down, some of you said up. That's why we don't guess. When one says down and one says up, and half of you answered up and half of you answered down, which was what I was looking for. Now, which way are we going to go if they're both crossed down? So now we've gotten ourselves to a situation where they're both crossed down. In here is where you guys have all of your losers. This is where you guys get confused and you do longs and you do shorts and things don't work out and everything's not going your way. This is the trouble spot for most traders. Now, not every trade's going to follow through, right? But we'll talk about rules as we kind of add in the fibs and the divergences. Now everything is going down. We'll see what happens. Oops, I meant to draw a circle. Valid trade, guys. Everything is going down. The fib to fib oscillator had gotten to the 75. That's a trend trade short. Now, let's see if we get any more. Another valid trend trade short for us because our small triggers are below all of our synthetic triggers moving to the downside. Correct? Fib to fib oscillators in the upper 25%. Down bar confirms it. And again, you know, the opportunity for us to make a couple $100 is in there. And now we're on the wrong side. And the triggers are no longer crossed back up. So look at what we end up with. We end up with a short that doesn't follow through, a short that doesn't follow through, a short that makes 20 ticks, and a short that makes 20 ticks. So we'll talk about management in a minute, but I don't want to do that just yet. So does everybody see the concept of having everything going your way? This spot is a trouble spot for people. This spot, everything's going your way. And again, this spot, you know, is where decisions are going to be made when the triggers go up and the triggers go down. And again, if you don't have a trade here, it's going to be okay, right? We're going to add in indicators later. Can we agree that if we get a trend trade with this look now, we have everything going strong? Let's find out where it is. Nope, we never, ever had any of our rules met. All right, so we'll wait until everything is... All right, this is the first time that the rules are met with both trigger lines going up for a trend trade long. Agreed? Pretty easy. And I'm not saying that there wasn't a short trade over here somewhere, right? We'll deal with that later. I want to have both triggers going in your favor so you see the easy ones. What's your opinion here, guys? Did we fail at the trigger lines and fail to take them out? So we had one trade that fit the rules, and then that was it. So as we move forward, obviously there's midnight. We have a trend trade set up right here, and it fails to follow through. And then that's it. You know what happens down here at these failures every time, right? You guys know the word I'm about to say, divergence. We'll look at that in a minute. Is everybody with me so far on the trigger line reading? Small triggers get above all of them. They all cross up and... oh, now they all cross back down again. So no follow through in this area. Again, you guys always ask the question in class, how do I stay out of a choppy market? Well, when your trigger lines are going in opposite directions, you get little moves but no follow through. Yes, Kamini. So now just look at the triggers here. Before you even get into what's going to happen next, can you see the look of your triggers? And you can start to anticipate the potential of a long trade that's going to work. Maybe. Well, didn't do it. So look, here's where we think about a long trade. And again, our triggers are on the wrong side. So one attempt, and if it fails, that's it. And again, I'm just going to keep going forward here. I want you to see, as many of these as you can possibly see. So large triggers going down, then we get both of them, and then eventually we finally, and this is why this little tool is easy for a visualization for study, but there's the first time we're on the wrong side with both of them crossed down and we end up with a trend trade short. And again, when you put this in perspective, this area up here and the low, this is about $275, $280 in between the high and low. And our objective is to make at least $200 a trade, 10, 15, 20 ticks and do it over and over. Did this go down far enough to warrant one more trade? I think the answer is yes. If it goes 250, for sure. Is everybody okay with that? So again, I'm circling these trades because we're going to add in the last piece of what we do in just a little bit, which is where are the areas that we're going to trade from. So here's a failure. Here's where we hit the triggers and we have a failure. So again, we're going to skip this one. Okay? And again, look, the same failure off of the top of the triggers. Look at what happens. All right, we'll go forward now. One trend trade from the bottom of your triggers. And now we're in between both. All right, so once again, look, below the triggers, failure. You guys understand the concept? Small triggers are below right here. We get a failure, and then obviously it's going to go down a little further. Now we end up with the situation that we really like to see, which is our small triggers above both of our synthetic triggers going up really strong. That's what we want to see for a trend trade long. It doesn't always give you one, but that's what we like to see. Now, this is 3 o'clock in the morning, but the one thing that I want you guys to recognize is that sometimes hours go by before we have everything lined up, right? It's easy to kind of scroll forward through time, but because this is 4 o'clock in the morning, and then finally this is 8:30 in the morning. So this is the first time where both triggers are crossed up, our fib to fib oscillator's in the right spot, and we get an up bar. First time. If you waited for that one time where everything came together, what do you think? $200 pretty easy? All right, let's go forward. Here's one that didn't follow through, right? So again, we're going to mark them up, and what we're going to do next, once we get done marking all of these up, is we're going to go back and we're going to add in our Fibonacci support and resistance. So you guys can see where divergence ended a trade. You can see where the areas for fibs helped the trade, and we'll put it all together. All right, so we're back in action to the upside over here. And first trend trade long on the wrong side. Does everybody agree with that trade? Both of the triggers are going up. First time below the synthetic triggers, we're going to take one more. Everybody agree? One more attempt at a trend trade that fails, which is fine. Look, you're going to get a lot of trend trades that don't always follow through. Managing them properly, granted this is at 10 o'clock at night, but still. One trade from the wrong side, and look at what we get. That's a failure. We hit the bottom of the triggers and we get a down bar. It's over. And not just is it over, it changes the trend. What you guys are going to figure out before we're all done is that when it fails like this at this spot, if you're coming off of resistance, that failure is going to end up being a short trade for you. But we'll get to that. I don't want to get too far ahead of myself here. Trend trades with everything going in our direction first. That's our key. All of our triggers are going down. Our fib to fib oscillator came up. Can we do a short trade? You bet we can. Now, what happens if we fail? See that? Again, protection of your money. That's what's going to be important for you. So now they're both crossed up, and now they're not. And now they're both crossed up again. You guys see how important the trigger lines are? When we're in between the two, it's choppy, and then when we break out, you end up with everything going your way, and then you get a trend trade that you can sink your teeth into. Now, how far is it going to go? We'll see. As long as our triggers remain above, we'll keep doing these long trades. We're getting close. All right, so that was our last one, and then our trigger lines rolled. So we had the opportunity for one. This one probably, was one, and then at least two, and then a final trend trade that didn't follow through, which is okay. I mean, you're going to have them not follow through. You have to learn how to handle them. So now look, we're on 8:30, and again, I'm going to kind of speed this up a bit. Short trade. Oops, excuse me. Short trade. First one from the wrong side with a failure. So that's it. We're not going to do anymore. Why don't we do them? Because they have lower probabilities. Does everybody understand that concept? I mean, you'll see this a lot, but long trade. I'm going to scroll forward a little quicker just so we can kind of get some trades in here. Everything going up. Long trade again. Is this exercise good? I mean, this is like going back and just kind of back testing your charts and really putting together, the plan for yourself on what look needs to happen in order for you to have high probability trend trades. And that's what it's about. It's not about doing 12 trades a day. It's about doing 12 trades that have a really good chance of winning. Both of these are valid. The small triggers are inside. First one with the small triggers below. Obviously, the apology for the first one not going. Is everybody okay with this? Is there any questions that you guys would like to ask before we keep rolling forward here? Trade from the wrong side, and again, look, this is a failure to get through. So we're not going to, and again, I know this is a little laborious, but again, the more you see what we do, the easier it's going to be for you to recognize what you should and should not be doing in the real world. So, again, look, we'll go forward and, this is going to start to be pretty easy to see for you, isn't it, guys? Fib to fib oscillator in the right spot, fib to fib oscillator in the right spot, all the trigger lines going down, trend trade shorts. First trend trade on the wrong side that doesn't win, we don't do the next one. First trend trade on the right side, obviously didn't follow through. And you can see, look, this is a situation where when we add in our fibs, if there's a bunch of red fibs there, then we're not going to do that trade, but we'll work on that one in just a minute. Trend trade short, one more time. Both triggers going down, fib to fib oscillator in the right spot. I say the same thing every day in class 500,000 times. Does everybody see it? First one, small triggers on the wrong side, it fails, which means we're not going to do any more shorts for the moment. Small triggers, everything's good. We're doing a short trade here. We're doing a short trade. That's probably still the same trade. And then this is the first short trade on the wrong side. Agree? And you can see where it goes, obviously. So we can do another short trade on the wrong side. And what we want to see is for it to continue below the synthetic triggers. If it doesn't, it's a failure. If we have a failure to get back below the synthetic triggers, probabilities go down, so we stop doing shorts. Everything is going up, so what do you have, guys? Trend trade long? And again, look, I'm going to go forward a little bit quicker just so we can get a few more days done here. And again, I'm just going to circle the trades so we can go through and we'll start adding in fibs after this, okay? So as I do this, do you guys have questions that you'd like to go through? I think pretty straightforward that, what we're up to here. So again, I'm going to mark up a few more. All right, guys. So now that we have marked up, and this is live market right here. Now that we have marked up everything that we need to mark up, we need to go in and we need to add in the indicators, the other indicators that we use. So again, when we look at our indicators that we have, we've got what? We've got the Pro Trader. We've got, actually I made a template for this, but so we've got Pro Trader, we've got divergence potential, we've got the synthetic divergence and the synthetic Pro Trader. All of which are set up perfectly for our 5-1 chart, believe it or not. So we've got 5-1 reversal bar markers, 14-2 reversal bar markers, 21-3 fibs. So all the charts that we use are accounted for on this setup here. So what I'm going to do now is I'm going to apply all of our Fibonacci support and resistance and the mid bands and the places where you guys are going to end up doing trades from. And we're going to go back now, and all of the circles that we drew in, guess what we're going to look for? We're going to look for the spot where we should have been doing the trades. So again, let me go back in time here to where we kind of started. And, look, I respect the fact very much that when you're brand new, I'm just scrolling back here to where we started. When you're brand new and you're looking at our software, you see a lot of lines. And yeah, again, it's important for you to be able to, I drew in a yellow line here where we started, so there we go. That's where we started. It's important for you guys to be able to, really see the charts. And I guess we started, there we go. That's where we started. All right, so I'm going to stretch this back out for you. So again, if your video is a half second behind, just give it a second, and then we're going to make sure that you guys get all this stuff, okay? Now, this is what you guys look at, right? This is literally, I mean, this is all of the indicators on the chart and everything in a template. And when you guys look at this, it's like, oh my God, should I be going along here? Should I be going along there? Should I go along here? Should I go along there? And this is the battle that you guys have to work for. So, no, Vittorio. So here's the idea. So let me break down the first one for you. Okay, and again, look, this goes back to our trading plan. And the reason that we drew all the circles on here is because in our plan, in order for us to have a trend trade, let me go back to our trading plan. First things first, we need to have our large chart for long trades look like, well, that's the short. Bear with me. So in our trading plan, we need to have our large chart look like this, which is going to give us the other trigger line configuration on the small chart. Now, also in our rules, right, so just in the written part of our rules, the rules for our trade setup is as follows. We need to have, excuse me, darn it. The rules are pretty straightforward. We need to have the 14-2 chart helping us, which we've got the right looks on that. We need to have our synthetic triggers crossed up for buys or synthetic triggers crossed down for sells. And again, look, this is just the simple portion of our trend trade rules. 14-2 chart helps. Synthetic triggers crossed with us, like we just talked about. Then the last piece, which we haven't talked about yet, is the entry areas need to be touched by price. Either the mid band with the correct color, fibs with the correct color. And then remember what we said about location of our trigger lines. If the small triggers are on the right side or correct side, we get in a little bit earlier. If they're in the wrong side, we like to look for further away spots. So you'll see how this plays out here. So when our triggers are on the correct side of the market, we're looking for blue fibs or green mid bands to get in. So again, ideally, if you look at this one trade, this is the best spot to get in. Agreed? Now, you don't know it's going to go up until after it goes up. So you have to trust your read of the fibs and the triggers and the mid band that it's actually going to go up. Now, let me ask you another question. On this next one, did we have an area for a long trade? Yes or no? Did we have support or mid bands or anything to help us? No. So again, that's not a trade for us. So you have to have, for a good trade, high probability trade, both triggers crossed up. You need to have fibs and or mid bands, and that is your high probability winning trade. Now that trade, I mean, obviously we made it to the first resistance, and you can see, I mean, net, before it came back down, it went up over $350 worth. And again, this was the first target, obviously, from our small chart. And again, we got to have a large chart, small chart combination, but we're just dealing with the small chart today. All right, so does everybody understand the concept? Same thing we talked about before, same rules, same everything. We've already marked up all the trades. Both triggers crossed in our favor. Fib to Fib oscillator has to be in the right spot. Watching the location of our triggers. If the small triggers are on the right side, correct side, we're going to do the trades. After the first trade on the wrong side, if we don't get through, we're going to stop doing the trades. Now, this is where we're at currently. Now that we've read the fibs and the trigger lines properly, we're going to look at the areas where we're going to enter. It's always the same. It's fibs and mid bands, fibs and mid bands, the support lines. We want to make sure we have room to our Fibonacci targets. Doesn't that make sense? I mean, you don't want to go long directly into a red Fibonacci area. You want to at least have 10, 12, 15 ticks away from the red line so you have enough room to manage a trade. And then the last piece of the puzzle, which you guys have seen 1,000 times in all of the videos and everything that we've done, is if you have divergence, you can do another trade if you haven't violated the trigger lines too bad. So let's take a look at the trades. Long trade here, I think everybody agrees. And again, we'll kind of work through this pretty quickly since we've already marked up all the trades. So this is a long trade from the wrong side of our trigger lines. And again, I think the trade, it'll start to pop out at you pretty quick. Do you see the support area that we're trading? Fibonacci support, divergence line. That's a valid trade, guys. Now, you can see that we run into trouble and we don't make it through it. So that's the end of our trade. Agreed? We don't want to do the same trade from the wrong side 5 or 6 times because it's not ideal. Now, as we progress forward, short trade. Did we have an area of resistance from which to trade inside the circle? Yes or no? Obviously, yes. That's the trade that we want to do. And again, this is the spot when you get back to resistance. This is the spot where you turn on your market flow strategy if you're unsure and let it handle your entry for you. And again, once you read the fibs and you read the trigger lines properly, so look, small triggers on the wrong side. Do we have an area to trade from here, guys? Of course we do. And look what happens. We do end up going down, but that's the end of it. Is everybody with me so far? I think it's pretty straightforward, but you guys have to let me know because I need to know from you. All right. Do we have an area from which to trade this trend trade to the long side? Yeah, they're not. We don't have a line there. So you see, watch what happens. Remember when we talk about trend trades from just the 14-2 triggers? It's not that you can't do them. It's that they don't go very far. Do you see why this trade died? Pretty easy to see in retrospect, isn't it? It was a trend trade on the little chart, but you hit resistance and then... Now, once we break that resistance, these are the types of things that we talk about in class. That's what we're looking for. And that is where we end up with trend trade longs to get back up to resistance. So do you guys see the area of the mid band where we start to say to ourselves, hey, we need to start thinking about a long trade because of our trigger line configuration? This one probably harder to do, right? Because we're coming off of some resistance here. Agreed? I mean, when you come off of resistance with divergence, you don't really think about doing long trades from your mid band. I mean, if anywhere, it would have been from down here. So that's okay, right? We wait for resistance to break. We say this 100,000 times a day. Once the red line turns blue, guess what you end up with? You end up with another long trade. Do you see the support helping your long trade? I'll draw the box in there, but 1-to-1 dots, mid bands, bottom of the triggers. You don't want to get in over here. You want to get in closer to the spot that's going to help you with your trade. As I go forward, this is going to hopefully become self-evident. Do you see the support spot for your trade? Blue fibs, green mid bands. You don't want to get in later. You want to get in close to that spot if your trigger lines say it's okay. Does that make sense? So you get in at support, guess what? You're going to get out at resistance. Now, here's the question. Look at this last one that we have here. Do we even have support here helping this one, or is that a bad trade or no trade? That's no trade because we don't have any support helping us and we have resistance hurting us. Agreed? This isn't a trade you would do. This one is a trade you would do for sure. This one, no. So what about after the fibs turn from red to blue? Would you do a trade? I hope you would. We've trained you up on that one. Fibs, mid bands, this whole area right here, guess what? That's what we want to see. We want to see supporting indicators helping us out. So not only do we have the right trigger lines, we have the right areas. And the result is self-evident. Now, question, do we have an area right here to take a trade or not? Is there an area there? No, there's no area. This is where you guys get the benefit of the extra trade that you're going to get in your market flow. Let me show it to you in the plan. Remember the one strong trade that we have? So this is the exception trade. If you've got a very, very strong market and all of the triggers on all of your charts are going up, and you haven't reached Fibonacci resistance, and you get a market flow long signal, you can take that trade. You guys remember that one? That's the exception. That's the extra trade that you get with your market flow. This is the spot in which you would do that extra trade. See how strong the market is? See how strong the triggers are? If you got a market flow trade after you pull back to your fib to fib oscillator at 25, and even if you don't have, right? So this is a good look for the market flow exception. Not sure if there was one there or not. We're not going to go that far with it, but because of the strength and because of the trigger lines and because of the overwhelming uptrend, you can get that one market flow extra long trade if you're able. Does that make sense? All right, so obviously, look at where we end up, guys. Remember, we talk about one more long trade if our small triggers are below. Do you see the entry spot? It's like almost shockingly obvious, isn't it? And then you have to ask yourself, did we make enough of a move in order to warrant one more trend trade? And then we asked ourselves, what happens after we retest the area and we fail? We no longer do trend trades because we're not sure that we're going to win anymore. Do you see it? First time below, we make a big move so we can do one more, and then we didn't break through and we didn't move the triggers. Do you see the nuance right here? Look at where the trigger lines are moving and the fibs are breaking. We get one more. And then we skip them. It still worked. But again, this is, exceptions that work. Most of the time they don't. Is everybody with me on this? Now, we circled this earlier, didn't we? Is there any area from which to trade in this spot? Do you have any support? Do you have any mid bands? Do you have anything here? No. There's nothing there. There's no trade there. What about this one? Is there any area that just shines like a beacon for you for that long trade? Can you see it? Hopefully the light's going on. You're like, whoa, wait a minute. I got it. That's really what this class is designed for, is to make sure that you understand not only how to read your fibs and triggers, but also where are the spots where you can start taking trades. Now, look, we go up, we come down, triggers roll, so no more long trades. And we're kind of meandering around in here. And again, look, some people will take shorts because of fibs. And, look, if this was a monster Fibonacci resistance area, then sure, you're going to probably take some shorts over here. We're not dealing with that right now. We're just dealing with the strongest looks possible so you can get the highest probability trades possible so you can put some food on the table and you can have a realistic chance to start making some money. And you're going to miss a lot of moves, but you're going to get the good ones. Okay? All right, everything's going back up. And again, look, mid bands, triggers, we try to take a long trade. What kills the long trade? Divergence. Divergence kills the long trade, usually makes it go the other way. And do you see the difference? We're stuck in between the triggers. All right, now let's move on to the next trade. Do you see the spot where you should have been getting short? Is there anything that sticks out inside of that little white circle? Fibs, one-to-ones, mid-band area. And again, this is a home run for us, guys, going short at 11:30. It just doesn't follow through. Why does it not follow through? Divergence. What happens when we get divergence? Usually we go back up to a higher spot and then we, take another stab at it. If we get divergence again, guess what happens, guys? Party's over. We try, we get out. We try, we get out. No harm done. So let's scroll forward. We're only on August 27th, so everything's going down, and we finally got a trend trade short, and we made some money, right? I mean, I think the area is pretty obvious. You had mid bands, you had everything coming together. Pretty easy on 20 ticks. And then this is your second trade over here. Fibs and the top. See, this is where you're thinking about going short. If you get up to here and then you get a market flow signal, then you get a short trade. And again, what ends the short trade, guys? Double bottom, evaluation, more divergence. The same thing happens every day over and over and over. Are you going to be able to ignore everything that happens and only take high probability trades? That's where we try to get you guys to. So again, look, this is one that you guys would more than most likely take on your small chart, wouldn't you? It's not both triggers going together, but when you've got a mess of blue Fibonacci support, you're probably going to take that trade. It's not highlighted in this example because both triggers weren't going up, but multiple time frame blue fibs, I think you're going to make an exception for that one, aren't you? Again, if you get a whole mess of blue lines or a whole mess of red lines, it changes the complexion. You may say to yourself, if I've got a bunch of blue lines, I only need one of the two triggers. And again, you guys have to have your own trading plan, but you know, food for thought as we go through and review charts. Again, one trend trade long with everything going our way. Do you see the entry spot inside of the circle? Give me a little Y in the room if you see it. It's really obvious, but you have to get comfortable with the look first before you can do that trade. And again, what kills it? Divergence and a failure. Very, very common to end a trade. Shall we go forward? The more times you see this, the better. Again, look, here's a trade. And I think you can see the area, right? We've got a mid-band, and then eventually you get a short. And what kills it? Divergence. Divergence kills the trades, guys. Not only that, we were kind of coming off of a fib, but if you did take it. All right, you want to find some more trades? We're on August 28th now. And we got a big move up, and here's the question. Do we have a reason here for a trade setup? Look at the circle. Is there any fibs or support or anything that even helps us think about a long trade? No, not at all. So without that, we don't have a trade there. There is no trade. So we'll wait for everything to line up, and we'll wait for everything to come together. And then when we get the rules met and an area, then we'll have a trade. So obviously we had a big move. I think that was crude oil news. All right, we got a trade. Obviously the market's going down very strong. Do you see the area where your trade would happen from? It's pretty obvious, isn't it? Now, we make a big enough move that we'll do one more. And again, if we fail to make a big enough move through the trigger lines to move them, guess what happens? We don't take this last one. If there was something fib overwhelming here, you might, but in our scenario, we're not doing it. So you get one winner, two winners, a small one, and then that's the end of the party. Now, everything is going up. Do you see the spot where you're going to be going long and the benefit of having the fibs? You see it? 1209.30. That's your long spot. And again, is it going to go all the way up or not? We don't know. If you get divergence, it kills the trade. Every time. Almost every time. There's a couple exceptions, but you guys have seen enough of them now to know that divergence really hurts things, doesn't it? You guys are also probably seeing that when you get back to your 21-3 triggers, you're going to watch out for things. Anyway, let's go forward until we have a trade that everything lines up again. All right, finally, everything lined up over here. It's really obvious on the support area here, isn't it? Multiple time frame Fibonacci support, and somewhere in this area, hopefully you guys get a long trade. It's really apparent when you have the rules down and you've got a consistent application of the rules, isn't it? All right, one more time. You know, look, this is a green line on there, but are we going long at Fibonacci resistance? No. We don't go long at Fibonacci resistance. That's not what we do. So that wouldn't be a trade. And you can see it takes a little bit, but we finally start to break out of resistance, turns it to support, and then we end up with basically divergence and a pivot stop out of divergence and a good long trade for ourselves. Now, you can also see this is where we have a green line for a long trade. Look at where we came from. We came from a major high of resistance. So again, in our trading plan, just to kind of rehash the trading plan, there are some things that we won't do, right? So one of the things that we won't do is in this section. If we hit multiple time frame fibs, we're not going to do trades on the smaller chart. Right? If we have divergence on all of our charts, we're not doing any trades. Vittorio, your question earlier was if price touches the triggers from the wrong side, stop doing trades. Hopefully we've answered that question. And again, you guys can see there's a lot of lines to look through, and only when everything lines up really, really easy do you get the right trend trades. And again, I think the entry area is pretty easy to see here. Mid-band, what kills the trend trade? Divergence. And again, as you guys work your way forward and all of the triggers are going up and everything comes together, this is a pretty obvious one, isn't it? 3 Fibonacci time frames of support. I mean, and really some overwhelming triggers here. Obviously, definitely a trend trade long situation. Now, we come from resistance with divergence, and our trade is short-lived. Not very surprising. Is everybody feeling comfortable with this? Again, look, we get this is one of those really strong market conditions. where we don't get a deep enough pullback to get to anything. And again, this is the one spot in our trading plan where this market flow trade becomes handy. If it's so strong that the market's not giving deep pullbacks, then this little market flow arrow is the way to go. That's the only way to kind of pick up this last piece. Now, if we hit support with divergence, do we want to go short? No, we don't want to go short. Pretty obvious, right? Now, if we go long at the mid-band and we hit the bottom of our synthetic triggers and we don't get through it and there's divergence, guess what happens? We're going lower. It's the same thing over and over and over. And again, look, these are the areas where, the market gets choppy. One of the triggers is up, one of the triggers is down, and the market behaves the same way when there are opposing forces. Triggers going up, synthetic triggers going down, and resistance. And, these are the areas we need to see a breakout before we really start to get some good trades. And when we get a breakout and we pull back to our mid bands, guess what happens? We get long trades that win. And when we hit resistance with divergence, this is not going to be a trade for you, is it? Now, if you get back to Fibonacci support and one-to-ones and mid bands, and you've got enough room to take a trade, now you might take that trade. Because you have supporting documentation down here. You've got fibs, you've got one-to-ones, you've got mid bands, you've got triggers up, you've got plenty of room to the area. And again, we're on 831? And we can go forward and look at this over and over, but look at the area. Fibs and mid bands. As we scroll forward, mid bands for shorts, fibs and mid bands for shorts. Last attempt at the fib and mid band, and then it fails. No support whatsoever for this trade. And then what do we have? Pretty tight areas. Look where we came from, guys. Multiple time frame fibs, and the last short trade didn't work. This is where our counter trend traders go long on that retest. We're not talking about counter trend trading today. And again, look at these trades, guys. Hopefully this is self-evident. You don't want to go short directly into a bunch of Fibonacci support. Agreed? I mean, it just doesn't work out real well for us most of the time. So you don't really want to go short into a bunch of support. As we progress forward, mid bands down into Fibonacci support with divergence, which just so happens to be a bottom. Coincidentally enough. And this one's going to be a tougher one. At least you have Fibonacci support, mid bands, and a one-to-one, and enough room to get up there, but still that's a tough trade coming off of resistance. All right, guys, questions, comments, concerns, things that you guys would like to go through as we kind of work our way into September here. One short trade and one divergence to ruin it. One short trade and no divergence, and we get success. Super strong market, but we hit fibs. Probably not doing that one either. One more attempt, and then it's over. One more attempt, and then it's over. One more attempt, and divergence from a fib. It's over. You guys get the pattern? All the triggers going down. Now there's not really a lot in the way, but we get divergence, and it ends the party again. It really is very, very consistent, isn't it? I'm kind of going forward a little bit quicker, but long trade, which is the beautiful long trade we like to see. The challenge is coming off of major resistance. And guess what? Divergence ruins it. Now, we go back up and divergence from resistance ruins it. Takes us down to support where we have a better shot of going up. And I'm just kind of going through quick now because I hope you guys don't need me to slow down on the patterns. So again, fib support and all of the rules met. And again, now we break out of resistance and strong triggers. Divergence ends the party again. So we don't do that one. We don't do that one. And we save ourselves some money. And we don't do that one because we came off of resistance in the bottom of our triggers, and we save ourselves some more money. And these are both good long trades. Didn't follow through, but you get the second chance at it. What do you guys think? Long from the one-to-ones, it doesn't follow through. Long from the mid-bands and fibs. Divergence messes it up. All right, I'm kind of going quick now, but again, short trade into support, and it doesn't go very far, does it? So we'll scroll forward some more. Yes, tough long trade into resistance. Easier long trade after resistance breaks from Fibonacci support. One more strong push back up after a strong uptrend. And same thing again. We break resistance, pull back to mid bands and fibs, and the old divergence trick. And again, we fail to get through a pivot stop out at the high, and this is the one you try to skip, if at all possible. Any questions? And again, guys, there's going to be other trades that, both triggers aren't crossed in your favor, but you're going to take this as a short trade. I hope you will. You don't have to have both of them, but what I was trying to do for you was prove that if you've got the right area and you've got the right trigger line configuration and you've got room to your Fibonacci support or resistance, you end up with really, really good high probability trades. And again, when we look at high probability trades, the one thing that we have not done in this lesson is this. We have not brought in our 14-2 chart. So again, I don't want you to take a small chart lesson and start ignoring the big chart. Because the things that happen on the big chart are really, really, really significant for us, right? When we hit Fibonacci support and we get pivot stop outs, we have to know that we can't go short anymore. The only thing we can think about is, potential counter-trend trades. Or if all the triggers roll up, trend trades. So, again, I don't want you to totally disregard the large chart because we did a lesson on a small chart. Again, I think this is super vitally important. Before you look at your small chart for the pullback area, make sure your large chart has the right look. Make sure that all of your trigger lines are in your favor. And you're going to find that you're going to build a comfort level of going long when this smaller chart is coming down into the support areas. Questions? Anything you guys would like to go through before I end this video? If not, I appreciate you listening to the lesson. I hope you found it helpful. I hope you participate in class and post in your pictures, and look forward to helping you guys recognize the right opportunities so you can make money in the market. Bottom line, you're here to make money, right? And, again, I want to keep things in perspective financially. If you do two 20-tick trades in a day, even if it takes you 6 hours of sitting there waiting for the right setup, two 20-tick trades a day, trading a 1 lot, you make $8,000 a month. Trading a 10 lot, you make $80,000 a month. So the progress for us, again, I like to do this, a lot because this is the path for everybody. During your demo, you're going to be spending time with us and learning some of the basics and making sure that you know what you're going to learn and how you're going to learn it and what you need to do. During your first 30 days after you purchase or lease software, you're going to really spend time watching the charts and learning which trend trade is yours and how are you going to enter your trade and how are you going to manage your trade. Then most people spend the next 90 to 120 days practicing that trade on a simulator. You have to prove and you have to know and you have to be confident that your trade is going to win more often than lose. And then once you have proven to yourself that you're going to make at least $200, $300, $400 a day, then you've earned the right to start trading one contract live. And if you can successfully trade one contract live and still hit $200, $300, $400 a day and do it very consistently with the high probability trades, and you can do it 2 months in a row, then you can go to 2 contracts. And this is a psychological thing. You need to trade for 3 months, 2, 3, 4 months on simulator to get it down dead to rights. And then when you transfer to live money, there's always a fear factor because there's money involved. So keep it small, spend 30, 60 days, trading small one contract, make sure you can win. Then when you go to 2 contracts, spend a few months there at 2 contracts and make sure that your psyche is right and you're still winning. And then you can really start to ramp up. So the process takes a little time, but if you get through the process and you get through the correct analysis of your fibs and your trigger lines, you're going to end up with high probability winning trades. So again, if you need something from us, let us know. Again, from the education page and the plan, spend your time on the trend trades, and we'll look forward to seeing everybody's winning trades in the room.